In today's video, I'm going to share with you guys how to set up the footprint chart on the NinjaTrader 8 platform with no additional indicators needed. I'm also going to share with you guys an effective and simple trading strategy using the footprint charts, as well as when we look over here on the 5-minute chart, I'm going to show you guys how to take advantage of moves like this for an easy peasy rules-based approach to trading the decline on the way back lower. We're going to talk about this and a whole lot more. If you're not yet subscribed to the channel, hit the subscribe button down below and give the video a big thumbs up. Now you're probably saying, Mike, what in the world is a footprint chart? Well, I want you guys to look at this. Each one of these, blocks is essentially a candle. Now I have this set to 6 ticks for the S&P 500. We can put this on a time base, meaning each block would be 1 minute, 5 minute, etc. Now the numbers on each side represent the bid or the ask. On the right hand side, these are the numbers. These are the amount of contracts that were traded on the ask at set price. The numbers on the left hand side represents the number of contracts traded on the bid side of the market. Now think about this. Normally, if you're trading on the ask, what is that? That is an aggressive buyer. Aggressive sellers are people willing to hit the bid on the way lower. And I want to show you guys some of the coloring techniques that I use to enhance this bar type as well. And that is going to be the yellow numbers represents the point of control within this footprint block that essentially tells us where the most amount of volume was traded. And again, this just goes ahead and applies it horizontally. Now I also added a profile to the side of it. I'll show you guys how to do that within this indicator as well. Then you're also going to see some magenta numbers and some blue numbers, which are going to represent sell and buy imbalances. You might be saying, Mike, wow, this is a whole lot of information. Yes, it is, but I'm going to make it very simple, easy for you to digest. And once we're done, you're going to be like, wow, that is very simple. Thank you for sharing that with me. So how do we go ahead and how do we get our charts looking anything similar to this? Well, one, if you have the NinjaTrader 8 lifetime license, well, you'll have this already built in. But what you want to do, if you have a 5-minute chart up here, you just simply right click and you want to go to data series. Now from the data series where it says type, instead of minute, we want to go down to where it actually says volume metric. Then that's going to open up the properties for us. So I went ahead and went back over to my volumetric chart just so I don't want to mess up the settings I have. I only have 3 days to load on this chart. Now, one thing I did is I put the base period type as range. If I put this, let's say to minute, then I can set that each one of these blocks will represent 1 minute in time. I can set it to 5 minutes in time, but we're going to keep this on range for this example as that was my preferred method of trading this before I actually purchased AlgoBox. Now we can see the delta type can be the bid ask, or we can change this to where it's up or down tick. I keep this on the bid ask, ticks per level 1, size filter 0, center open close bar. Now, if we uncheck this box right here and I click apply, one thing you'll notice is the candlestick right here will go on the outside. I prefer to have mine on the center. I hit apply and it goes back towards the center. Now, show as profile. If I uncheck this right here, you'll notice that inside you just see numbers. If we have this on show as profile, you can kind of see where there's a miniature, volume profile within there. Also, show volume. We want to make sure that show volume is checked. Sensitivity strength, I just left that the same. Size filter, I keep that at 0. Show imbalances. Now, if I uncheck the show imbalances, what do you know? All the numbers are either white or yellow. However, that's not what I want to see. And we'll talk about what an imbalance is here in a minute. But I'll put show imbalance and I put imbalance ratio. I set this to 3. Now, in balance mode, we can do horizontal or diagonally, and we want to do diagonally. And I'll share with you guys why that is in here in just a moment. Now, minimum delta for imbalance, I keep at 0. I do have a reason for that. And we can basically, if you want to change the color of the imbalances, buy imbalances I have right here. The sell imbalances I have as magenta. Now, there is one more criteria that you may want to go ahead and you may want to add. That is right down here where it says show statistic bar. If I uncheck that, you'll see that there is no bar down here at the bottom. And I'm going to go ahead, I'm going to recheck that real quick. And I'm just going to go ahead, I'm going to click all these little boxes. I'm going to show you how much statistics we can actually see. Wow, that is a whole lot of number. We can see trades, volume, buy volume, sell volume, delta bar, delta percent, cumulative delta, minimum delta, max delta, delta change, delta, so on and so forth. So you guys get it. But to keep things very clean and very simple, we simply want to uncheck everything on here except for delta bar. Everything else, I'm going to go ahead and uncheck. Think about this. We don't see the bid and the ask at the same exact price, right? We always see the ask price is a little bit higher than what we see with the bid. So that's why we want to basically compare. So in this example right here, we're comparing 285 to 173, meaning, in this scenario that 285 contracts were slammed out on the bid and we had 173 actually fire off on the buy side. Now, the reason I want to see them imbalances, one, they can act as support or resistance, but I don't think we're going to dive into that in this video. But also, more importantly, if we look on this candle, look at this candle right here. We have 1, 2 sell imbalances. How many buy imbalances do we have? How many blue numbers do we see? 0. So what do we expect the next bar to do? At least probe a little bit lower. And that's exactly what happened over here. If you look over here, look at the buy and sell imbalances. We only had one buy imbalance, 133. So which way did price go on the next candle? It actually tested a little bit higher. The next one, we only have one buy imbalances. What happens? The market tested a little bit higher. Only one buy imbalance on the next one. The market tested a little bit higher. So that's one way we can use the buy and sell imbalances. Now, we can also use these as potential support resistance. I prefer to see 3 for my imbalances, in terms of stacked imbalances. Now, in the next candle, what do we expect? If we start coming down and coming back up, this could be an area where we may want to sell because we know we have stacked imbalances there. The market a lot of times will come back up and then we'll flush back lower once again. So that is another way we can pay attention to the buy and sell imbalances. Now, let's go ahead and talk a little bit about strategy. Now, if you look right down here at the bottom, what do we see? We see the delta per bar. This is going to be very, very important. And at first, it might be a little bit hard to look down here and look at where price is. That's why when I used to trade this, I actually had it where it plotted the delta below each candle for a very specific reason. See 118 here, the delta was 118. It was nothing more than to make it more visually appealing. So let's talk about strategy. Now we're going to rely heavily on the delta per bar. And I want you guys to look at each bar and I want you guys to analyze, is it more bullish or more bearish, just simply looking at the delta? A higher number represents bullishness. A lower number is going to be weakness. Hopefully guys will be able to keep track of at least 2 delta numbers. Again, it's not very hard. So what we want to look at is in this example, when we're actually running up here towards the high, all right, and this high at 1528 is the same high that we talked about right over here on a basic 5-minute chart. So how do we know that weakness is starting to come into the market up in this area right here? Very simple. Let's look at the delta and we're going to follow this on a bar to bar basis. All right, we had a down bar right here, minus 236. The next delta, 185. Okay. Next delta, 393. So these two deltas consecutively are more bullish than the previous delta, meaning 393 is greater than 185. 185 is greater than minus 236. Now, I want you guys to pay attention to when this starts to flip. As we start coming up higher, is 229 greater than 393? No. Then we get 51. Is 51 greater than 229? The answer is no. So right here on this candle here, I'm like, uh-oh, the trend may be getting ready to, at minimum, have a minor correction on the way down. However, I want to use confirmation. So instead of just saying, oh, we have less of a delta, bam, I'm going to short it. Instead, we can put a sell stop order right below this candle, one tick below it. If we come down towards that level, boom, we'll enter in the market. The market continues to push higher. No harm, no foul. Let's look at the next delta. We went from 51 to minus 216. So now we've had 3 deltas back to back that continue to get weak. So what do? When this candle closes, put a sell stop right below that candle, and then down we go. And the beautiful thing about this is we can either put our stop loss on the other side of this delta within that candle, or we can put our stop loss at the top of that candle. You might say, Mike, that is a one-off event. That does not happen on a regular basis. I promise you guys, I traded this strategy many, many years, and it does. Now, will there be losing trades? Yes, not every trade is going to be a winning trade, but we can have some very good reward to risk ratios. For instance, look at this, roughly risking 8 ticks on this trade. And how far do we go? Just down to here is 23 ticks. Now, even if you went ahead and said, you know what, I'm only going to go for a 2-to-1, risk 8, make 16, especially when you think about the fact that with a 2-to-1 reward to risk ratio, you only have to be right 34% of the time to essentially break even, not counting commissions. So now let's look at this as we start coming down towards this low, right? Notice we get weak, 212. 187, minus 187 is not as weak as minus 212. Then the next candle, minus 384. Okay, we're starting to get weaker once again. Then minus 1317. We're definitely starting to get weaker. Then minus 452. All right, minus 452 is more bullish than minus 1317. Then the next candle, plus 385, right here above this candle, we can look to go long on the very next candle. Now, does this produce a big gain? No, it ends up being a loser. And like I said moments ago, not every trade is going to work out. But also look down here, we had stacked sell imbalances right here. So as soon as we started to get above this print right here, 103, guess what? We were likely going to go ahead and have upside testing. Also, look at the candle right here at 1529. We have 1, 2 buy imbalances. And what do we expect the next candle to do? To go higher. The next candle has 3 buying balances, the 1 selling balances. What do we expect? The market to go higher. This candle right here, we have 4 selling balances with no buying balances. What do we think is likely going to happen? Probably going to start and roll over. And let's actually look right here at this scenario, because now we have 43 minus 195 minus 356 on this candle here. So we have 2 back-to-back deltas that continually got weaker than the previous candle. So let's go ahead and revisit that. 195 is weaker than 43. Everybody can agree on that. Minus 356 is weaker than minus 195. So what do? In that event, we put a sell stop right below that candle, and we can put our stop loss either right above the point of control, or we can put our stop loss right above the top of that candle. Either way, from here just down to this low right here is good for 14 ticks. Now, do we go lower? No, we actually pop up and go higher. Now, one thing to note, I want to see, straight movements. Like right here, you see low, 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 low. I don't want to see where we just start chopping back and forth, kind of like over in this area here. I want to see straight moves when I start to look to do that analysis. So let's look at this example right here. When we start coming off this little consolidation, we start coming down. What do we see? Minus 403, minus 476, that's getting weaker. Minus 422, this is not as weak as a prior candle. Plus 219, okay, right here, we know we're getting a shift. Now we have 2 deltas back to back that are stronger than the prior candle. Also on this candle, what do we see? 1, 2, 3 buy imbalances. What do we think is likely going to happen next? Now we can enter long where right as soon as we break the top of this candle, our stop loss can either go right below the point of control or below that candle. Now, in this example, from the top of this candle, how far did we go just right up to here? 17 ticks. Did we go any higher? No, we actually didn't go any higher in that scenario. Did we see any signs of weakness around this area? Well, we had 297 minus 257 minus 235. So we did not have, 2 consecutive candles back to back that got weaker. We had one, but not the second one. So there was no trade on the way down. Then you can see where these candles are just kind of chopping up and down, up and down. This is what you want to stay away from, right? You want to see the very straight and consecutive moves in the market. Even look right here as we started to push up right here. Did we see any signs of weakness? Well, right here on this candle, we had 481. Then as we came up and made a slightly new high, only 72 on the delta. Then on this candle right here, what do we see? Minus 131. So what do? Well, we put a sell stop right below that candle. If we break it, guess what? We are likely going to go lower. In that scenario, from here down towards the low, that's 16 ticks. If you're only risking 8, that would be a 2-to-1 reward to risk ratio. Notice the candle that made the high, we have 1 sell imbalance, no buy imbalances. The next candle, 2 sell imbalances, no buy imbalances. So what direction do we think the market is likely going to go next? It is likely going to go lower, and that's exactly how this shook out. Now, if you'd like to see how I gain an edge in the market, looking at the higher time frame charts, watch this video right here.